Hey there, it's Casey Dimon here, TaxSaleAcademy.com. Thank you so much for joining me on this week's question segment. This week's question comes from Raider Nation. Simply put, he wants to know, how can I limit risk as a new tax-sale investor? So I hear from a lot of people who are genuinely interested in tax-sale investing. They see the opportunity, they've done their research, they might have even gone to an auction or two, and they might have even purchased a property. But they have that one four-letter word lingering in the back of their head during this entire time: risk. When I started as a tax-sale investor, I did not understand what this word even meant. I was single, I was young, and had my entire life ahead of me with very little debt, right? The older I get, the more I understand just how important of a factor this is. For most people, and likely you too, regardless of your personal situation, you must always take into account your risk tolerance. Nobody wants to invest in anything that they know is a loser or they're gonna lose money, right? I don't, and I'm sure hope you don't either. Anytime you make an investment, there is a risk. You could lose some of your investment, all of your investment, or maybe even more than your initial investment if you're really, really unlucky. But the truth is that every single thing that you do in life is gonna have some sort of risk. You've just learned how to manage or mitigate it properly in most situations. You can drive down the street going to the grocery store and you can get into a car crash. Yet most people don't let the risk of a crash stop them from driving anywhere, right? We've learned how to mitigate those risks. Veteran tax-sale investors know that there are plenty of ways to eliminate risk just about entirely when you go into a tax-sale investment. They have processes, steps, strategies, and experience that they can fall back on in their business. Some don't worry about risk as much as others, while other people will think about it nonstop and they'll do everything that they can to eliminate it. But as a new investor who doesn't have that same experience to fall back on, how can you work to eliminate your risk? One word: preparation. That is everything. If you're looking to eliminate risk as much as possible, you must be prepared properly. From a personal experience in my business, when I'm prepared properly, I will succeed at that investment. For the times when it didn't go as well as I wanted to, or maybe it just went bad, I can always go back and look at my preparation. And most of the time, just about 99% of the time, I will have failed during that preparation aspect. There are lots of different avenues that we can go with this, but let's go over three important aspects of preparation that will help you eliminate risk. The first one are laws. Tax-sale laws are complicated. These books right here, these contain the laws for all 50 states. Look how thick these things are. Many of these are a dozen pages or more of small text just for one particular state. There's a lot to these laws, and we have to remember the tax-sale laws were not designed for the investor. They were designed for the county to get their tax revenue back. This isn't the open market. This isn't the Wild West. These laws must be followed when you invest in tax-defaulted real estate. Learn the laws in these books. And if you know them inside and out, you're gonna do much, much better in this business. You'll go much farther and you'll really start to eliminate your risk. The next one is gonna be your due diligence. Know everything possible about the property that you are investing in, and you cannot go wrong. Know everything about it. Know the entire history about that property. If you know everything, and I mean everything about that property, you cannot lose. But from a practical standpoint, we can't possibly know anything about that property from 100 years ago, right? But your goal should be to know as much as possible about that property. You should strive to be an expert and know every single little detail about a piece of property before you buy it. The closer you get to achieving the goal of knowing everything possible, the lower your risk becomes. Now, don't oversimplify this. Let me explain just a little bit about what I mean here. I get asked to do a video every now and then on what specifically we should look for when doing due diligence prior to a tax-sale auction. The truth is, it's not physically possible for me to do just one video on the due diligence that's required. I cannot stand here and talk enough about all the possible scenarios that can exist and that you should be looking for. That's why, of course, I created the Tax-Sale Academy to take you step by step through all the proper due diligence. That's so much to it that I want you to understand. You can't just do surface stuff, right? There's lots and lots of research and due diligence that you must do. But if you prepare with that proper research, you will succeed. Now, the last way to prepare is to prepare for the process. The first auction that I went to when I was 18 years old is ingrained in my memory. I remember it just like it was yesterday. I literally remember telling myself to calm down because I was so nervous, I was shaking. My suggestion here for you is to go through the motions over and over again until you're ready and until you make that first investment, until you have that confidence. Go ahead and find the list. Find them today if you want to. Research those lists. Start today. Read the rules. Read the frequently asked questions. Talk to auctioneers. Talk to other investors. Talk to anybody in real estate in that area. Watch the process unfold multiple times. Then study and learn what happens after the process, the steps that you must take, everything involved in that process, and you're going to be golden. Know that process inside and out, and you'll work to eliminate that risk. If you know everything about every aspect of this business, you cannot lose money. It's that simple. Now, obviously, it's not quite that easy to know everything about it, but if that's going to be your goal, that should be your goal. Know everything you can about it, right? You can't forecast economic changes with 100% certainty, for example. But if we know everything possible about as much as possible when it comes to this business, and we continually strive to be more and more knowledgeable every single time, your risk is going to go down proportionally as your levels of preparation go up. So the more prepared you are, the lower your risk is going to be. The less prepared you are, the higher your risk is going to be. So hopefully this has helped you out a little bit. If you're looking to eliminate risk, prepare as much as possible. That is going to be the number one piece of advice that I have for you when it comes to eliminating risk. I truly hope that you've enjoyed this video. For more information on tax law investing, head on over to taxlawacademy.com. While you're there, grab a copy of my book, Tax Sale Playbook. The book itself is free. Just cover the shipping costs to get it from our warehouse to your front door. We're actually going to send you a physical copy of this book. Again, taxlawacademy.com. Take care. Bye-bye.